Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined today by Ken Odeluga, who is a market analyst at City Index. Thank you very much for coming in today, Ken. Well, let's start off with the UK house builders and specifically Barratt Developments results this week, and you brought along a chart just to explain what's going on with Barratt.
Yeah, so Barratt Developments released its final results this week. There was no major surprise about the results. They'd released a trading statement in July, so essentially most of the news was already out. But the interesting thing about the release was that Berkeley Group Holding also released a trading statement on the same day, and a number of other house builders too. There was a big theme from both of them about the central London market and the unmistakable slowdown, the kind of deflation of prices in the central London market. Now, for across the sector, regardless of the fact that both Barratt and Berkeley reported quite reasonable numbers, shares fell quite sharply. And Barratt's seemed to fall the most. They're down about 4.5% at one point, closing around about, well, the prices moved 3.9% down, so quite a move. Berkeley, similar sort of level. The main interest here for me is that Berkeley is the one that still, although it's furiously trying to backpedal, still the most exposed to central London. Barratt Developments, very, very confident about the outlook, widely dispersed around the country, wide dispersal of price ranges, so a bit of inbuilt protection there. So the sell-off actually took it below this trend line that you can see that I've drawn from July 2016, which is essentially the Brexit vote sell-off. The recovery sort of starts at the beginning of the line. You can see the price respecting that trend line all the way up to current prices. And we broke through. We've actually broken through originally in January 2017, and then we subsequently recovered. I think this is quite an opportunity. Although I'm not, it's not a huge long-term conviction about the house builders. I think they are challenged, but I do think that Barratt is going to be one of the ones that's going to be perhaps most inured to the forthcoming challenges because of its wide dispersal, home to help to buy, government sort of backing for production of house building, and the built-in structural dynamics of the UK's house building market will actually benefit some builders more than others. And I think Barratt will be amongst them.
And unlike Barclays, Barratt's is more of a nationwide building company,
Absolutely.
So maybe won't be as affected by a bubble bursting in London, let's say.
Exactly.
And I mean, it's obviously had a great move to the upside, but you potentially see more upside on this.
What I think is that I mean, for my company, volatility, momentum, hedging, probably I'm looking more on this in terms of momentum. I may not have a huge conviction for the very long term, although I'm not as pessimistic as most. I think the British housing market constantly defies expectations, and there's not really much of a mystery why. So what I'd be thinking is that yes, I think there's still more, and I also think there's a differentiation move going on here. There's a group of these, Barratt, Berkeley, Bovis, and probably one more, that have risen more or less about the same amount this year, around about 30%. But and Berkeley's amongst them as well. I think they will increasingly start to diverge as people think, well, they're not all going to sort of like continue at the same strong clip. And I think Barratt, because of the factors that we mentioned earlier, should actually diverge to the upside. And maybe your companies like Berkeley, maybe your one or two smaller, more London and South East focused builders will be kind of like, there'll be a sort of a negative differentiation in their case.
Understood. Potential pairs trade then, Ken.
Exactly, yeah.
Thank you very much for joining us today, Ken.
You're welcome.